hidden cost of buying a home. You heard that right. There are costs associated with purchasing a home that a lot of people are not familiar with. And today we're going to break that down and make sure that once you begin your journey to purchase a home, that you are fully prepared financially to make that purchase. Because a lot of people already know right off the bat that you need to have a down payment, right? Whether it's 3%, whether it's 3.5%, 5, 20% or more, everybody has an idea that they should save up some type of funds for a down payment. But there's a bunch of other fees. So let's time and jump right into it. My name is Jonas Helbert. I'm with the Miami Valley Experience and Streetlight Realty. I have a partner. Her name's Kate. You'll see her on this channel as well. And our entire mission is to help educate potential home buyers so that it makes the process a lot smoother and makes sure that they are educated as they're going through that process. So I kind of like segued into them versus getting into the costs, but I promise you right now. So the first thing I want to talk about, and I've got some notes up here on the screen, so I will be looking away, is closing cost. Closing costs can mean a lot of things. If you ask 5 different lenders, you're going to get 5 different answers. Same thing if you were to ask 5 realtors on what their idea of closing costs are. So this may not be the by the book definition, but traditionally speaking, when someone hears closing costs, they're thinking of things like loan origination fees, appraisal fees, attorney fees, if there are any, which in Ohio, we're not an attorney state, but you have other things like title fees. If you need to get a survey for some odd reason, that may be included in the closing cost. Credit reports, background reports, all of that stuff is typically considered a closing cost. Is it technically a closing cost? Who cares? The point is, you're trying to make a mental note of how much money do I need to bring. Now, typically, closing cost is going to be anywhere from, I would say, about 3 to even as high as 6% of the loan. And there are a lot of different factors that go into determining whether you're going to be on the low or the high end. Part of it is credit score. Part of it is loan type. Part of it is how much are you going to be paying up front, even though technically that would be a part of closing cost. Just kind of somewhere between 3 and 6% price is going to need to be set aside for closing cost, or I'm going to have to ask the seller to help contribute. And depending on the loan, it could be all of it, it could be some of it, or it could potentially be none of it. Just all depends on the market. Next, I want to talk about property taxes. I think everybody knows that property taxes exist, but did you know that it's actually a part of the funds you're going to need to purchase a home? Now, I'm not going to give any examples of how much property taxes is or are. I don't know what the proper way of saying that is, but my point being is you're going to need to start an escrow account if you're putting less than 20% down. An escrow is a separate account that the bank is going to start on your behalf for homeowners insurance and property taxes. And homeowners insurance is one of the hidden costs. If you're buying in, let's say, July, so you're going to need July, August, September, or December plus 2 months. So you would need of property taxes saved up to close on a house in July. Now, if you were going to be closing in May, you would need May, June plus 2 months. Now it's only 4 months. So half the amount of months as closing in July. But the thing of it is, you still don't know how much better off you're going to be comparing 2 different properties, because property taxes is different everywhere. Then we have homeowners insurance. I hinted to it. Homeowners insurance is a little bit easier. You're going to need 12 months or a year for your homeowners insurance because that's how they bill it. And then you're going to have 2 months reserves. At least most banks will require a 2-month reserve. So you'll have the 2-month reserve plus your 12 months. So you're paid up for the year. And then your escrow account will collect 1/12 of that every single month that you make a payment. So by the end of the next year, you still have 14 months worth. And then if you're purchasing a property that will be in an HOA, you're going to have HOA fees that you're going to have to pay. Some of them will have like an initial member fee that up front, and then you would have to make sure you have your monthly fee ready to pay that HOA, or quarterly or semi-annually, however the HOA collects the payments. Unrelated to closing cost or setting up your escrow account, you're also going to need to pay for a mortgage application fee. That can run anywhere from $25 to $250 or more. It helps cover the expense of the appraisal. And then another fee that you're going to be encountering is your home inspection fee. Now, no, you are not required to purchase a home inspection when you are purchasing property. But unless you've been living in the property and know the ins and outs of it, it's highly recommended that you always get a home inspection on any property that you're purchasing, whether you're an investor who's getting ready to do a fix and flip, or if you're a traditional buyer who is getting ready to purchase their first, second, or even third home. Doesn't matter. Just get the home inspection. That's all I'm trying to say. Those are your nitty-gritty costs. You're also going to have a timeline of when most of this is going to be collected. So right off the bat, when you go under contract, you're going to have some earnest money that is collected. It's not a fee. It's not a cost. It is money that you're putting down in good faith to say that you're serious about the transaction. So you'll be putting down some earnest money within the first few days. And then within the first week, you should be paying for your home inspection. By the second week, you're going to have to be paying for the appraisal or the application fee through the bank. And then the remainder, your down payment, the closing costs, escrow account, all of that stuff will be paid at the end of the transaction, which is within, let's say, 30 to 45 days. Typically, could be longer, could be shorter. So keep that in mind as you're beginning the process of purchasing a home, which brings me to the very last point. If you are getting ready to try to buy a property in the greater Dayton area, the Miami Valley region, please reach out to us. I'm Jonas Helbert with Team MVE, and we help people every single day with purchasing and selling of real estate throughout the entire region. And we'd love to work with you. If you found this information to be useful, do me a favor. Please hit subscribe, leave a comment, share this video if you will. It would be greatly appreciated on our behalf because it gets the message out even. And we are all about educating anyone who's getting ready to purchase. So have a great day.